Today, I'm looking to buy more Johnson & Johnson, ticker JNJ, because I believe it's on a dip. To be a successful trader and make some money, you must first know what you're trading and be able to do some basic financial analysis on it. You must have a winning strategy that you tested and you know your win rate. You must have a good risk reward strategy where you're risking less than you're making. And you must have a good trading disposition and be very patient because swing trading is very, very boring. So what is it I'm trading? I'm trading Johnson & Johnson, which is a healthcare company that manufactures products, and it's a global conglomerate. This is from the Procter & Gamble website, and they make all kinds of products, Downy, Gain, Tide, products that you've used in your home. They make baby products. So how does Johnson & Johnson fit in with my overall strategy? How does it fit with today's market conditions? Well, I see the next 2 years in the market to be very volatile. We have the election uncertainty. We have the virus. We have the Fed pump. We're going to have some censorship issues in America. We're going to be going to green energy and transition out of oil, and the healthcare industry is going to be changing. There'll be more monitoring via your wristwatch. Your toothbrush will monitor you and your saliva. Even your toilet will take a sample of your urine and diagnose it to see if you have any diseases. You'll be connected. And I really, really believe that 5G is going to change the world. You're going to have smart homes. You're going to have green energy. Your retail is going to drastically change to be more e-commerce. The trucking will change, transportation, and all of this will occur in the next 5 to 10 years. With the political system, the healthcare industry will drastically change, but I think it'll change for the better and be more efficient and more tuned to the customer. So I've taken a list of stocks and built a watch list, of which Johnson & Johnson fits prominently. And you can see that Johnson & Johnson, tested with my RSI trading strategy, had a win rate of 100% over the last year. It executed 6 trades and all of them were winners, and we received a net profit of $181. Johnson & Johnson is trading around $144 now. So the reason for speaking to you is I believe that Johnson & Johnson is on a dip, minor dip, and now's the good time to buy. I have not received an MACD signal or a RSI signal. I just looked at the chart and feel that after last few days of downward trend that it's going to reverse itself and for a continued rise up. Looking at the chart of Johnson & Johnson, we can see that earlier in the month we had a trend upward, and now the past few days it's been a trendward down. The MACD has reflected that downward trend quite nicely. My zigzag, though, which is tuned, did not see a transition. It's seen that generally that this was only a dip and had not changed direction. Over here, the zigzag was generally down. RSI went down, but it didn't reach the 30 level or the oversold level. So I think it's time. Oh, by the way, the histogram is showing a slight decrease, and it looks like the divergence is becoming smaller. So I think that Johnson & Johnson is on a dip, and I'm going to add some to that. So how's this company doing, and how is their business doing during this epidemic? So what I'm trying to do is find out some basic knowledge about the company, not trying to know everything about it. I'm not an expert, and so I just need enough information to know whether this is a good company or a bad, and what other people think about it. I follow several YouTubers that are experts and do perfect analysis. Daniel Broke is one of those. But you don't need to be that good. He's been doing it for quite a while. He probably has some training in it, and it's very comfortable. You need to watch his videos. But I hope to be that good someday. So we're going to take a look at the numbers, see if we can find any news on it, and then make a decision. Johnson & Johnson is an undervalued against the expensive U.S. stock market. PE is lower, and it has a higher dividend yield. This is a very stable and recession-proof company, whereas some of the other companies that are doing some virus development are not so stable. People are still buying their products. So I believe that Johnson & Johnson is a very safe company. And if the market does crash, which I do think there's going to be some volatility, Johnson & Johnson will crash with it, but not as big and not as deep. This is an old article from June. The last price was about $144, and the median price that it expects to grow is over 17% off of that price. Over the last 12 months, the stock has rose over 17%. Johnson & Johnson has a strong buy rate from the organization Stock News. The Investors Business Daily asked the question, is it a buy? And they're saying it's not, because their technicals are below their 50-day moving average. So, and that's normally a bearish signal. When it's trading above its moving average, it's a bull. Generally, the Seeking Alpha article says that Johnson & Johnson is a visionary company, very stable, provides a dividend, and will be around many, many more years. Also has a great product line. Zacks is rating it as a hold. I use FinViz to get my bearing about the stock. You can see Johnson & Johnson for the week has lost 2%. The one-day performance, Johnson & Johnson has been up on Friday. Drilling down, you can see another version of the chart. Since the March COVID situation, Johnson & Johnson climbed back up. And then it's been slowly grinding down. And here is that down, up, down. Actually, I like that because of because I'm trading the RSI. So you want the fluctuations like that oscillate. Looking at some preliminary financials, the current price is 144. The target price is 166 up here. Target price. Is it optionable, shortable? And it has an analyst rating of 1.9. Less than 2 is a buy. If you remember, Zacks has it as a hold. PE is positive. That means it's a profitable company. The forward PEs looks good too. The stock price is above $5, so it's not a penny stock. The market cap is $378 billion. It's huge. I require the stocks that I trade to be over 300 million. Okay, so this is a huge corporation. So based on these preliminary, the numbers look pretty good. Whether you believe this is a dip or continue going down, that is your due diligence. I believe it's on a dip and will go up eventually. The target price is $166. That means there's $22 of fluff here that you can make some money. So it is a bargain. And there's some, I use a gram number, and that tells me if there's some value based on its book value and the share price. The gram number there's $207. The stock price should be trading at $278 instead of where it's trading now, $144. So there's, according to the gram number, there's a lot of intrinsic value in this company. The book value is positive, and therefore it has assets. The last earnings was October 13th. It's slightly disappointed, I believe, and generally I think this is a strong company. This is a company that I want to be involved in, and it's not a hyped up company like Neo. I see nothing in its financials that would stop me from buying this company. But wait before you go out and jump right in and buy it at the open on Monday. First, we have to investigate and plan for our money management strategy. Most of the people that are viewing this channel have a small account. Taking an account of $5,000 and trying to grow it 6% quarterly, which is about 24% annually. And we have to remember Warren Buffett does about 20% annually on the average. That gives us about $300 per quarter. And if we have a system, a tested system that has a win rate of 70%, that gives 7 trades that are winners and 3 that are losers. And if we apply a 1 to 1.5 risk-reward ratio, that comes out to be $30 for a win and $20 for a loss, which equals $210 of winning and $60. That equals $150 for 10 trades. And so in order to make $300, you need to do 20 trades. So to get that risk of 1 to 1.5, I set my profit target at 3% and my stop loss at 2%. And this way, I always will win more than I lose. So I can still lose one and win one and still have a slight increase. In order to win, I need a system of 50%. Now, I realize that 300 a quarter does not sound like a lot, but as you make more money, you can scale in. So let's make some money. I'm going to open a long position on Monday. Hopefully it comes in around $144 with a target price of 148 and a stop loss of 141. And the number of shares that I'm going to trade is 8. My expected profit is $36 and my expected loss is 24. So back testing Johnson & Johnson for the last year since January 1st. Using that scenario, this was my profit. They were all winners. I did long trades and short trades. But the past does not predict the future. All it does is indicates whether this particular stock works well with my RSI indicator. So tomorrow morning, in summary, I'm going to buy at the open at $144. So in this slide, in this briefing, I'm expressing my opinion and not offering advice. But I just want to know, it's your trading strategy. Does your trading strategy achieve 70% or better? Or what is your edge? So in conclusion, I'm trading the Johnson & Johnson on a dip, expecting to make $36 or lose 24, and I'm going to set my stop losses at 3% profit and 2% stop loss. I'll be purchasing 8 shares, and I'm going to not trade options this time. Remember, swing trading is very boring, but if you learn some consistency, it's very, very rewarding. I want to thank you for watching. These videos will get better and smoother as I practice more. Thank you, and see you next time.